Welcome to this presentation of the buy-sell line versus the news. This is a Specialist Trading Weekly Stock, E-mini, and Forex lesson. Hello everyone and welcome. My name is Stephen Primo. I am the president and founder of Specialist Trading, and in this week's educational webinar we're going to see how well your most recent trading would have fared had you either used our proprietary indicator, the buy-sell line, versus taking your signals from the news. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using these two main ways to trade. But please remember that we can in no way guarantee that any of these results will be repeated in the future. So please remember to take a look at our disclaimer, and then we shall begin this week's stock, E-mini, and Forex lesson. All right, as we said, we're going to see how well our trading would have fared using these two different ways to make our decisions. But for those of you who are not familiar with our proprietary tool, the buy-sell line, let's just have a short refresher course. All right, the buy-sell line is probably our most important tool and powerful tool that we use at Specialist Trading. We incorporate it virtually in everything we do, in every strategy and every methodology. So that's that important, but at the same time, it's extremely simple. In fact, to show you how simple it is, it's simply the 50-period simple moving average. That's all it is. But what we want you to do is to plot the 50-period simple moving average on the chart you're currently trading. It doesn't matter if you're a day trader looking at 5-minute charts. It doesn't matter if you're an investor looking at monthly charts or a swing trader looking at daily bar charts. It doesn't matter which time frame or what direction you're interested in trading. All we want you to do is have a 50-period simple moving average always plotted on your chart. And in order to use this properly, in order to use the buy-sell line properly, all you have to do is ask yourself this question prior to the trade. Remember, not after you've pulled the trigger, not after you're in the trade, but prior to the trade, ask yourselves, where is price in relation to the buy-sell line? Okay, I'm going to say that once more because it's that important. Always ask yourself prior to entering the trade, where is price in relation to the buy-sell line or the 50-period simple moving average? Because if you ask yourself that question before you enter, you'll only come up with two possible scenarios, because if price is above, then you should only be looking for buy setups. In other words, you should only be looking to enter the market if price is reasonably above the 50-period simple moving average. And conversely, if price is below, then you should only be looking to go short or for sell setups, sell opportunities. And if you want to even take that a step further, what a lot of our aggressive traders will do is that once we see that we've had at least 2 to 3 closes either above or below that buy-sell line, then they're only going to want to be, have positions on the side of that market. In other words, if you're long and you see the market sell or close 2 or 3 times below the buy-sell line, then a lot of our aggressive traders will simply exit the position and no longer be in it, or else they'll tighten their stops if they happen to be long, or they will maybe sell half of their position. So this is an aggressive way in which to use this tool, but it's extremely powerful, and we're going to see how well using this tool, the buy-sell line, would have fared in your trading decisions versus taking your decisions off of any news items that would have happened in the most recent weeks, going back about a month or so. So let's start off with stocks, okay? And let's start off with a stock that's really been in the news lately. That's Apple. Apple has not been faring well at all, and many people have been holding this stock. I know a lot of investors have this in their portfolios, their IRAs, and they're just holding on to it, and they're wondering what's going on. They've lost probably a good portion of their portfolio, their size, anywhere from 25 to 40 or 50%, depending upon where you got into Apple. So let's look and see what happened. Some news came out this past week, and it wasn't very good for the company. It wasn't very good for investors holding Apple stock, because Apple stock falls 10% after disappointing earnings report. Now this came out January 24th, which was Thursday morning at 7:14 a.m. This was Pacific time. Apple stock opened trading Thursday down 55.27 points, or roughly nearly 11% or 10.75% to 458.73, as investors reacted to a first quarter earnings report that was deemed disappointing and the company's reduced outlook for growth. Now, the stock had closed Wednesday before the earnings report was released at 514.01. After the earnings report was released, showing record revenue but flattening profits, the stock was pummeled in after-hours trading that drove it down 54.24, or roughly 10.5%, down to 459.76. So, by all accounts and measures here, you can see that this is not good news. The stock overnight. Once the earnings report came out Wednesday, overnight trading really pummeled the stock, went down roughly 10-11%. So just looking at this news, if you use this to make your trading decisions, let's say you had this in your portfolio, let's say you were day trading, but you had a position, you would most likely say, you know what, I've got to sell. This is terrible. This news that just came out Thursday morning, or came out actually Wednesday evening, but now I have to get out Thursday morning. So let's look at the stock. As we can see here, Apple has been in a steady downtrend for a good amount of time since the summer. But just looking back towards October, you've been waiting for the earnings to come out. Hopefully, if they were good, it was going to make you feel a little bit more confident about holding this stock. So the earnings came out this night, which was Wednesday of this past week, which was the 23rd. And as you can see what happened on the opening, here's was Thursday's action right here. The first day opening and then going lower, and this is what happened today, Friday. We went down even more. So had you decided to exit your position, holding on to your position in Apple, you would have taken a large loss, and as you can see here, it hasn't been very nice. You haven't had some nice nights of sleeping holding on to Apple in the past 6 months or so. How well could you have done had you used the other tool rather than rely on news or waiting for news reports, hopefully hoping and praying that they were going to be good, but as you can see they weren't? What if we had not relied on news at all and just said we're going to rely on the buy-sell line? Well, we simply plot a 50-period simple moving average. And as you can see, going all the way back to October, the beginning of October, the buy-sell line was telling you you should be exiting Apple if you're holding it long term, and you should be actually only looking for sell setups. We had at least a good 2 to 3 closes here at the beginning of October. So this was your key enough to tell you if you're holding on to a long position, you should tighten up your stop. Maybe you should sell half of your position, or you should exit it altogether if you're an aggressive trader. And now you start looking for aggressive ways to go short if you wanted to trade aggressively. So this would have been roughly about 640, and look at what you would have saved. You would have saved almost 200 points while waiting for the news to come out. All right. So this is, in this instance, in this Apple instance, you would have actually been out of the stock roughly 630, 640, as opposed to 430, 440. I think in this scenario, it's safe to say that using the buy-sell line would have fared much better. Let's see how this could have helped us with the E-mini. Okay, going past this past couple of weeks, or going past to the end of December. If we look here on December 28th, we see that U.S. stocks fall as hopes fade for U.S. fiscal deal. Dow loses 1.21%. Now this is coming on December 28th, remember, at the very end of the year, but the headline read that U.S. stock prices dropped on Friday as the nation headed for the weekend, and one more 2012 trading day on Monday with no deal in sight needed to steer the country away from the fiscal cliff. Remember the fiscal cliff? Everyone was worried about that at the end of the year. A combination of tax hikes and spending cuts taking effect in unison at the end of the year. Failure to outright avoid the cliff could result in the U.S. sliding into a recession next year. At the close of U.S. trading, the Dow Jones Industrial Average finished down 1.21%. The S&P 500 index was down 1.11%, while the NASDAQ Composite Index fell 0.86%. So bad news. If you're thinking about going long, or if you're just going off of the news, you would have said to yourself, well, gosh, this is terrible. I'm going to sell my positions. I'm going to get out of the market. This is terrible news. The market is reacting to it, and I don't want to be in the market at all. So I should sell, or I should not even think or consider buying anything at all. Let's look at the E-mini. So for a future trader, if we're looking for swing positions or trading the futures based off of the S&P 500 here, well, we would have said that, well, here's when the news came out. As you can see, this is when the market really fell out of bed, and we have been steadily going lower and lower. How would this have fared if we compared it to using our buy-sell line? Well, if we plot the 50-period simple moving average coming to the end of the year, we would have seen that actually for most of this time we were actually faring well above the 50-period simple moving average. But on that day, when people started to react, seeing that there was no help in sight with the fiscal cliff, they were actually in sync. The market closed below the 50-period simple moving average. So looking at the news and using the buy-sell line, you are actually in sync. You should not be in the market. You should not be looking to go long. You should simply be either on the sidelines, or you should now start to look for some shorting opportunities if you're an aggressive trader. But let's see what happened the very next day. As we can see, what happened the very next day, stocks rallied. And if you're still watching the news, you would have said, well, I'm not going to do anything yet until I get some more clear ideas about the fiscal cliff. But had you been simply following the buy-sell line, you would have spotted that once again, we are above the buy-sell line. And just for this one blip below, for all intents and purposes, the majority of prices were above the 50-period simple moving average. So you could actually look for some buy opportunities. And one of our premier strategies, strategy number 7, actually gave a buy signal this day. We were above the buy-sell line, and this one little blip below really didn't account for much. So we really pretty much negated that and still looked for things from a bullish bias. In other words, we told our clients to go long on that particular day. Well, had you been sitting on the sidelines waiting for good news, you would have missed the great rally that happened within the next month. As you can see here, the market has gone straight up, and if you're still looking at this bad news, you probably would have said, well, once things looked great, it was too late to get back in the market, because guess what happened? Once there was some good news that came out, the market gapped up tremendously, and even though it still would have been okay to purchase stocks or to go long the market, maybe perhaps buying the spiders or some type of ETF that was correlated with the S&P, many people probably would have said, well, it's too high now, I'm not going to do anything about it. But had you looked at the buy-sell line and were a member of specialist trading, you could have taken advantage of getting long on this particular day right here. All right, so once again, the buy-sell line would have helped you in this scenario with the market going up this past month. Let's look at the Forex markets now. Okay, people will say, well, see, I can see how this works maybe with stocks, especially with stocks, or maybe with what's going on in the market. But with the Forex, there's too much money involved in the Forex. There's too much, there's way too much things going on globally, and there's way too many things going on with economic conditions around the world. There's no way you can rely on a 50-period simple moving average as opposed to the worldly news. Well, let's see how the buy-sell line could have helped us as opposed to news, looking at the dollar-yen. Now this came out on December 10th. All right, it says the dollar-yen slides on expectations, not any concrete news, but on expectations that Fed policies will stay loose. So on December 10th, the headline was the dollar fell against the yen on Monday as investors avoided the U.S. currency ahead of two-day Federal Reserve meeting that begins on Tuesday. So people basically, if you were reading the news, reading the headlines, and relying on news, would have avoided the dollar, yen, or any other currencies because you're waiting for what the Federal Reserve is going to say during their meeting. And this could go on for days or whatever, or perhaps the meetings could end and nothing would come out of them. So you're basically on the sidelines. You're not getting involved in anything. And if we look at the chart going back to the beginning of December, we see here that the dollar yen was pretty much in a range, just kind of going sideways, lower, back up to the top of the range, back to the lower portion, back up to the top. So as you can see, a lot of people were in an indecision mode, not knowing what to do, not having any clear idea whether the dollar yen would go up or go down. And according to that news there, they were saying you probably should not do anything until the Federal Reserve meets and until they come up with some type of conclusion. Well, if we listen to the buy-sell line, we simply applied a 50-period moving average, and our buy-sell line is telling us something totally different. Our buy-sell line is telling us to look for buy scenarios. It's telling us to look for buy situations. All right, we should look for a setup to go long. It's not telling us to wait. It's not telling us that we should wait and see what the Fed says. It's telling us that we're above and the market wants to go higher. So our clue is to look for buy setups. And had we done that and taken advantage and forgotten about the Federal Reserve meeting and taken advantage, we would have been able to take advantage of this really nice run-up that the dollar yen had in the past month. All right, but if you were waiting for that, you may have missed it, or whatever the Fed said, you may have said, well, boy, that doesn't really fit with my scenario, and you would have jumped the gun, possibly looking to go short. Once again, the buy-sell line, weeks ahead of any type of meeting, was telling you you should be looking to go long. So if we look in all these three scenarios, we see that the news was a day late and a dollar short, whereas the buy-sell line was well ahead of the game. In each instance, you would have exited Apple probably 200 points higher had you been in the position, and had you been waiting for news, you would have known that in any news, regardless, you would have been looking to go short because price had been well below the buy-sell line for going into the news or earnings report weeks ahead. If we're looking at the E-mini, a lot of people were waiting to see what was going on with the fiscal cliff. The buy-sell line was telling us to go long weeks before any news came out. Same thing with the dollar yen. It was telling us to go long regardless of what the Fed was saying. All right. Remember, in review of the buy-sell line, it is our single most important tool at specialist trading. Why? Because it instantly takes the guesswork out of your trading. That's one of the reasons why we don't rely, or we preach to our students not to rely on any type of news, because news is subjective. One person's reading of the news can have them saying that it's positive, or another person their interpretation could say it's negative. So there's guesswork involved when you're trying to interpret what's going on with the news. The buy-sell line is cut and dry. You're either going to look to go long or you're looking to go short. There's no two ways you can get around it if price is above the buy-sell line or price is below. So it instantly takes the guesswork out of your trading. That's why it is the main component of the Specialist Edge. Everything we have at Specialist Trading, all of the edges that we try to instill in all of our members and students has the buy-sell line incorporated into it. Remember, you can apply this to any market and any time frame. This is just not something that applies to stocks or applies to going long or short. You can apply it to any time frame, whether you're looking at a tick chart or whether you're looking at a monthly chart. As we said, it's extremely powerful but very simple to use. Just ask yourself, where is price in relation to the buy-sell line? But remember, don't ask yourself that question once you're in the trade. You must ask yourself that one question prior to entry. So if you get a buy signal, say whatever strategy you're using, I don't care if it's based off of news or I don't care if it's based off the tides of the ocean. If it's a sell signal, but price is above the buy-sell line, don't take it. It must be in sync with the buy-sell line. All right, to review now, we talked about the buy-sell line versus the news, and we can see how the buy-sell line has the odds or advantages much more in your favor than trying to interpret what the news is. In order to get the Specialist Edge, you must learn all of our strategies and learn all of the tips and techniques such as we presented today with the buy-sell line. And then we always tell our students to paper trade first. This way you'll become familiar with the process and you'll see how it unfolds in real time. All right, this is our Specialist Edge. Every once in a while we hit these great home runs as we just showed you this past month, but we're really aiming for consistency. Consistency is really just rooted in simplicity. It's 2 steps forward, 1 step back. We're looking to have you trading 20, 30, 40 years down the road as opposed to someone saying, I can guarantee you hit a home run every time. And we also know that that's really not possible because many times these people that are looking to hit home runs will just as easily lose everything as well. So we're really looking for consistency because consistency is what will sustain you throughout the years. Remember, if you have any questions, please be sure to visit our website or to check us out at specialisttrading.com. In closing, we ask that you take one last look at our disclaimer. We showed you a lot of performance results. We showed you how the buy-sell line works versus trying to interpret the news. But please remember that we can in no way guarantee that any of these results will be repeated in the future. Thank you so much for attending these free educational webinars. We'll see you right here next week with a brand new educational webinar. Bye-bye.